Listen, this has been true for 15 years. You're better off on Bitcoin's team than not. I'm going to say that again. You are better off on Bitcoin's team than not, period. Whether you're a country, a president, a CEO, a corporation, an individual, a mistress, whoever you are, you're better off on Bitcoin's team. And so I think the game theory is realizing itself in that way. And that's, part of the game theory in which Satoshi designed this thing. It's true today. It's very, very true after Trump won the election. Trump's been very public about his stance on Bitcoin, his relationship with the SEC, the idea of a strategic reserve. This is all very public. And so if you're a country or any large pool of capital, listen.
Strike CEO Jack Mallers sees Bitcoin as the key to economic resiliency and financial independence, and he believes it changing the world. Mallers highlights Bitcoin's transformative potential to change the financial landscape and guard against the weaknesses of established monetary systems, as its use is growing rapidly on a worldwide scale. Jack contends that Bitcoin's fixed supply, which contrasts sharply with fiat currencies or products like cell phones and fast food, where production can easily increase to match demand, is what really sets it apart. Due to its limited supply, Bitcoin will always see an increase in value as interest grows, confirming its status as the most revolutionary asset of our time. Jack boldly distinguishes Bitcoin from traditional assets like stocks or real estate, calling it an invention that is rewriting the principles of wealth generation and acting as a shield against monetary collapse. Bitcoin is more than just a hedge. It is the foundation of a new financial paradigm, one in which value and empowerment are ingrained in its fundamental structure. Watch till the end as we explore Jack's most recent observations, demonstrating why Bitcoin is the future rather than merely a wager on it. Please remember to like this video, subscribe to the channel, and enable notifications for future updates. Enjoy the video and thanks for watching.
For everything in life, with more demand, you will find more supply. If everyone in the world wants an iPhone, Apple can make more supply and give everyone an iPhone. If everyone in the world wants a McDonald's cheeseburger, McDonald's will make sure they find a way to make every single customer a cheeseburger. The only thing where that's not true is Bitcoin. If everyone in the world wants a Bitcoin, we cannot engineer more Bitcoins. It's the only fixed supply, the only truly scarce thing in the world. Bitcoin can change the world because the world cannot change Bitcoin. The world can change iPhones, the world can change hamburgers, the world can change stocks, the world can change real estate, the world can change the dollar, the world cannot change Bitcoin. It is the only scarce engineered asset in the history of our species. So therefore, Bitcoin's the only thing in the world where more demand has to find a higher price. If you want more Bitcoin, you have to get it out of the market, not out of the ground, not out of a fryer, not out of Apple's headquarters. You have to get it from the market, from those that have it. And so if you want more Bitcoin, you got to bid it to a higher price. So that is what we're seeing. Bitcoin is the most performant asset in the world because it's the scarcest asset in the world. It's the only asset that demands higher price for more supply. That's what we're seeing, period. And for all the people that are like, well, Bitcoin, you know what it is? It's just correlated to the stock market. It's just correlated to the election. No, Bitcoin is not a hedge. Everything else in the world outside of Bitcoin, precious metals like gold, are correlated to earnings, to cash flows, to performance, to quarterly reports. Bitcoin is not. Bitcoin is not. Bitcoin is a solution. It is not a hedge. Bitcoin is a solution. It is not a hedge. Bitcoin, when you look at Bitcoin, it's the best reflection of currency debasement. It's the most performant reflection of currency debasement. That's all it is. And so Bitcoin is not a hedge. Bitcoin is a solution. Bitcoin is the only scarce thing you can own, period. Your time and your Bitcoin. Everything else you can make more of. That's it. That's it. That's why the only two things I value are my life and my Bitcoins. Nothing else matters to me because you can always make more of them. The smartest thing you could have done over the last 15 years is take dollars and put it into Bitcoin. At any point, now we're at all-time highs. At any point over the last 15 years, the smartest thing you could have done ever is take dollars and put it into Bitcoin, period. And so Saylor's doing that. Now, what's unique about what Saylor's doing? Saylor is selling you leveraged Bitcoin. Let me explain. Here's the product Saylor sells you. You have $100,000, let's say. I'm just picking a round number. Whatever, $10, $1, $10,000, $100,000. Say you have $100,000. What Saylor is saying is if you give me your $100,000 in the form of buying MSTR, I will get you more sats, more Bitcoin than if you do it yourself. This is Saylor's Bitcoin yield, sats per share. What he's doing is he's engineering you more sats per share. So if you buy MSTR, he's saying, I will get you more sats in the underlying, how a share is correlated to Bitcoin on the balance sheet. I will get you more sats than if you were to do it yourself. Now, the trade-off is very obvious. You've got counterparty risk with Saylor. You've got counterparty risk with the stock market. You've got counterparty risk with the US government. I told you guys, I prefer my sats on ice. I prefer my sats in cold storage. The price I put on my own self-sovereignty and on counterparty risk, I just don't mess with it. I'm at a point in my life where I don't want to trust anyone else outside of myself. That's just where I'm at. But the product that Saylor sells is extremely valuable, is that if you give me the money, I'll get you more Bitcoin. That's incredibly valuable product. And in that way, MSTR is like 150% exposure to Bitcoin. So when Bitcoin goes up, MSTR should go even further higher. When Bitcoin goes down, MSTR is going to perform even worse. But that's the product that Saylor's selling is.
According to Jack Mallers, the current spike in Bitcoin purchases is noteworthy, particularly considering the $1.7 trillion market valuation of the asset. It takes enormous resources to move a market this huge, and institutional investors are fueling this growth. The fact that Bitcoin ETFs have produced almost $7 billion in 24-hour trading highlights Wall Street's increasing interest in them. Mallers compares Bitcoin to a strategic edge in a global game, highlighting its distinct allure that stems from its worth and scarcity. He points out that people, businesses, and governments are realizing the potential of Bitcoin and increasing their investments. Mallers calls the U.S. government's idea of a strategic Bitcoin reserve a daring step to increase confidence in its financial commitments and a potential game changer. A move of this kind might have a significant impact on Bitcoin and the international economy, leading to previously unheard of changes in how people perceive value and money. According to Mallers, this message is having an impact on the globe at large and will influence finance in the future. Let's examine Jack Mallers' observations in more detail using snippets from his most recent conversation. Make sure you subscribe, like, and turn on notifications to stay updated.
The buying activity we are seeing in the Bitcoin market is substantial. You're talking about an asset class that is now worth well over $1 trillion. Actually, let me tell you exactly how much Bitcoin's worth. Bitcoin sits at $1.7 trillion market cap. So in order to move this market, you can't convince your dad to go download Strike and buy Bitcoin. In order to move this market, you got to have some real size, some real capital. And the fact that Bitcoin's gone so big. Now, just so everyone knows, I know this is simple math, but it's math, and sometimes the simple questions are the best questions. It doesn't take another $1 trillion to move of capital, of buying, to move the market $1 trillion, right? When you've got something as scarce as Bitcoin, it doesn't take a lot of money to move it substantially, meaning it could take $2 billion to move Bitcoin $200 billion in market cap because there's not a lot of people selling, right? But nonetheless, you cannot move this market now with a bunch of retail friends at the pub. You used to be, back in the day, we used to be able to move this market with a bunch of people at our Bitcoin meetups, but that's not true anymore. That was true 12 years ago. So today, it's a lot of institutional buying. I think the Bitcoin ETFs hit almost $7 billion of 24-hour volume today. And so we know Wall Street is here, but it does, to me, look like there is some substantial size and pool of capital that is buying Bitcoin. And just think about the game theory, to be totally honest with you. Listen, this has been true for 15 years. You're better off on Bitcoin's team than not. I'm going to say that again. You are better off on Bitcoin's team than not, period. Whether you're a country, a president, a CEO, a corporation, an individual, a mistress, whoever you are, you're better off on Bitcoin's team. And so I think the game theory is realizing itself in that way. And that's, part of the game theory in which Satoshi designed this thing. It's true today. It's very, very true after Trump won the election. Trump's been very public about his stance on Bitcoin, his relationship with the SEC, the idea of a strategic reserve. This is all very public. And so if you're a country or any large pool of capital, listen, the total value of assets in the world is like $900 trillion or something absolutely asinine. There's a lot of wealth that's better off on Bitcoin's team than not. And the fact that the US government is saying, one of the ways we want people to potentially buy in to the promises on our future of the country is by building a reserve of Bitcoin. I can't even state to you the level of importance and the order, like how massive that is for both our country and for Bitcoin. That is our strategy being built in front of our eyes, is saying we're a country built on future promises as the world reserve currency, on debt. And people are starting to question the promises we are making to our allies, to other countries, to our peers, to the public, to our people. And in order to instill confidence in the people, that we hear their feedback, we know there's been a wane in trust and in confidence in us. In order to reassure them that we believe in growth, equality, technology, hard money, hard assets, we're going to start backing our promises with Bitcoins. That's massive. And the game theory that sets off is unfathomable. And so do I think that message is now loud and clear and resonates and well understood globally? Yeah, 100%. I mean, wake up, CNBC talking about world reserve Bitcoin stockpile. So I don't know, if I were a smaller country, or any other country for that matter, would I front run Trump? Yeah.
With a $1.7 trillion market valuation, Jack Mallers highlights the Bitcoin market's increasing maturity and size. He notes that rather than small-scale retail activity, changing such a large market today takes enormous institutional capital. This change is a reflection of Bitcoin's development into a valuable asset on a worldwide scale. According to Mallers, Bitcoin's price fluctuations are exacerbated by its scarcity. Because there is a finite amount of Bitcoin available for purchase, even relatively tiny financial inflows can cause notable market movements. The strong trading volumes produced by Bitcoin ETFs, which indicate growing institutional interest and Wall Street's entry into the market. He links this action to game theory, which is the foundational idea of Bitcoin and was incorporated into its design by Satoshi Nakamoto. Mallers contends that joining the Bitcoin network is strategically beneficial for any entity, including individuals, corporations, and nations. He emphasizes this by making the audacious claim that you're better off on Bitcoin's team than not. The potentially revolutionary ramifications of the U.S. government contemplating a strategic Bitcoin reserve are also discussed by Mallers. By demonstrating a dedication to innovation, tangible assets, and financial stability, this action may help rebuild international trust in America's financial promises. He points out that such a move might set off an explosive game theory dynamic on a worldwide scale, with other countries seeking to include Bitcoin in their reserves. Don't forget to like, subscribe, and turn on notifications for more updates. Thanks for watching, and we'll see you in the next one.